Hello and welcome to the look ahead for Friday, the 28th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be expecting Tokyo inflation, which is expected to just tick a little bit higher. Also expecting UK GDP in the European session, as well as Canadian GDP in the US session, followed by US core PCE, as well as several Fed speakers, including Fed Governor Bowman, Mary Daly, and Barker. So let's just kick off with what we're expecting from US core PCE, the highlight of this week. Expectations are for core PCE to cool slightly to 2.6% year on year, down from 2.8%. And on a monthly basis, it is expected to increase by 0.1%. That's down from 0.3% previously. Now, the data comes as we have a lot of focus on whether the Federal Reserve will be cutting interest rates this year or not, especially after Federal Reserve Governor Michelle Bowman raised questions over the Fed's need to cut rates at all this year. And said that the Fed was certainly in no rush to do so. Now, today we did have jobless claims data, which came in slightly stronger than expected. The jobless claims were a little bit lower, but continuous claims were at the highest level since the end of 2021, suggesting that there is some weakening going on in the jobs market. Now, let's just take a quick look at this is gold. This is what we'll be watching tomorrow, specifically with this US inflation data. Really interesting. If we get cooler than expected inflation, then we would expect that to be bullish for gold. We could find that it moves above this falling trend line, near-term falling trend line. But more broadly, gold has been trading relatively range-bound, capped on the upside by 23.90. So, if we do get weaker than expected inflation, and that does support expectations of the Fed moving to cut interest rates sooner, then that could help gold back up to that 23.90 level. Beyond there, 2400 and 2450 in focus. On the downside, if we get weaker than expected US inflation, hotter than expected US inflation, that's going to be bad news for US dollar dominated and non-yielding gold. On the downside, 2300 immediate support, and below that 2280, which is the May low. Now, I also mentioned that we have Japanese or Tokyo inflation. It's usually a lead indicator for Japanese inflation. So between Japanese inflation and the US inflation data, that does mean US dollar, Japanese yen is going to be even more in focus than it has been this week. Now, if we just have a look at this chart, we can obviously see that it has been trending northwards. It's been supported by expectations, or should I say, the divergent expectations between Federal Reserve and Bank of Japan, pushed to 160.90, its highest level in 38 years. And we did see some weakening in the yen today, some strengthening in the yen today after stronger than expected retail sales data. Maybe if we get slightly stronger than expected inflation from Japan, that will also help strengthen the yen. But for as long as the Bank of Japan is sounding particularly dovish next to the Federal Reserve, then this trade is supported. I would say, though, it is, as far as technicals are concerned, it's blue skies above. There's potentially 162 could be the next level to be looking at. But this is a psychological game. You've got the Bank of you've got Japanese authorities threatening to intervene. So on the downside, 160. But if they do intervene, then, or if the market gets particularly jittery, that we could see some pretty wild swings like we did when there was an expected intervention in May. On the downside, as I said, 160. Below that, watch out for around this 158 level, which is the May low. Let's just have a look. I also said we've got UK GDP data coming through. So we'll just take a quick look at the FTSE 100. FTSE 100 is also in focus. UK GDP data is the final reading. It's not really expecting it to be market moving, but let's just have a look at the FTSE anyway, because we've got the UK elections coming into focus next week, with elections on the 4th of July. Now, FTSE, again, is relatively range bound, I would say, capped at the upside by around 83 and on the downside by around 81.50. We have just fallen below this rising trend line, which dates back to beyond the middle of last year. Now, buyers are going to want to look to get back above that trend line in order to bring that 83 level back into focus and the 83.50. But you know what? Failure at that 83, we've seen a bit of failure at 83, the falling below that rising trend line, the RSI moving below 50. I think that it could be, we would be looking at a test of the 81.50. Below there, 8,000 comes into focus. So that's all that there is for today. I do hope that you have enjoyed what you've been seeing. If you do, then please do give this video a like. Let me just get the risk warning up. And if you would like to see more videos like this, then do subscribe.